Hey YouTube, this is Zach with Achilles Financial. Today we're going to be talking about Wells Fargo and Company. This is one of the big four banks, big four financial institutions in the United States, up there with Bank of America, JP Morgan Chase, and Citigroup. We've talked about banks a lot on this channel. It's an industry that I am very familiar with, and I like the banking stocks, but the ones I like out of the top four are really any of them except for Wells Fargo. So coming into this conversation, keep in mind that I am considering them to be one of the weaker ones in the overall banking sector. You can see here that in terms of a peer comparison, you can see that the stock has done very, very well over the past 52 weeks, as have the other banking stocks. But if I'm in banking, I am looking for strong, consistent growth, largely going to be driven by that dividend as well as share buybacks. And I also want to use this to maintain my position. And out of any of the stocks that are present here, the expectation or the concern that I would have is that Wells Fargo is the only one that has the capability to drop significantly. They've had to deal with regulatory concerns and consistently under the gun because they have an asset cap that they have to maintain. But they did have some news today where you can see right here, they launched a multi-cloud partnership with Microsoft and Google. One of the concerns going forward for anyone in the banking sector is going to be the internet infrastructure that a company is utilizing. What you can see this panning out to be is whenever you look at the income statement for banks, the big way that they generate money is interest on their loans. The other thing that they can get is fee income, but the main thing that they're generating is interest. Their main expense is going to be interest expense. So you can see that elsewhere, but the main thing that I'll highlight down here below is not just the interest expense that you can see along here, but the main thing is going to be non-interest expenses that you can see here. Now, what they're not including on this particular breakout that you can see here on the right-hand side, due to the fact that on TD Ameritrade, we're looking at the grossed up results, you're only going to be able to see the high level. But the big thing to point out is the company has consistently had to spend more on the non-interest expenses. So you can see that this is steadily growing on a year-by-year basis, and that is largely driven by the fact that you have to continue to increase your development of your facilities, have to increase the data security because you are holding so many users' data, and for that reason you're going to continue to see this to grow. So what that looks like is we have this total net income already getting pressured by low interest rates, and now you're also having to increase some of that cash flow to where we are seeing that get put under pressure because you have to increase some of those expenses. So the idea here is, what are banks utilizing their money, their actual cash flow that they have available? You can see Wells Fargo actually does not have nearly the same free cash flow that a lot of the other banks will have. If you go and you look at what JP Morgan, Bank of America, Citigroup, they're using that cash flow to increase dividends, to issue share buybacks, and Wells Fargo doesn't necessarily have the same capabilities to do so. So for that reason, they're already in a weak position. So I think that the news that they're partnering with these major players is good. My concern is that if there was going to be a stock that is going to come under pressure in the banking sector, it would be Wells Fargo, because you also have senators like Senator Elizabeth Warren, who's coming out and saying that we need to break up Wells Fargo. They've consistently had ethical issues in terms of some of the scams that they have run, and they've also had poor leadership and poor punishment for that leadership. All of those reasons, generally speaking, point to not favorable government viewpoints of the aforementioned company. So for that reason, when we're talking about the stock price as a whole, you can see that banking stocks in general have been under pressure. However, Wells Fargo has continued to climb over the course of this time period. However, comparing this to a Bank of America, to a JP Morgan Chase, I think there's significantly more upside in those stocks compared to this one, because they have the capability to continue to buy back their stock much more efficiently. They can grow through acquisition much more simply as well, because they have no asset cap associated with them from a total assets perspective, not a market capitalization perspective. But last but not least, the thing that I would highlight for them is that their leadership team tends to be portrayed in a much better light, and they have an incredibly strong reputation in the industry compared to Wells Fargo, which does not. So all this being said, if I were to pick a bank stock, it would probably be JP Morgan. I'm not particularly interested in going in on Wells Fargo at this point in time. That's not to say I don't think that it is a safe investment. It is just not the one that I am looking for at this point in time. So that's my opinion and nothing more, because I'm just some guy on YouTube. Make sure to do your due diligence when you're checking out these stocks. And if you find this type of content helpful, please leave a like and subscribe. Thanks everyone for watching, and I'll talk to you later.